Hey guys, how are you doing? In today's video we'll take a look at top 5 dividend stocks which we can buy today to hold and live off the dividends. We'll take a look at the best dividend stocks that are currently trading, which we can buy with this price and with high dividends. And basically there are two main strategies when investing in the stocks. The first is growth strategy. It means when we're buying some stock and counting on its price to rise over a certain period of time. And the second strategy, which we'll take a look today, is buying shares and basically having free money, which is dividends, by just holding that shares. So the first company we'll take a look today is TotalEnergies SE, ticker symbol TTE, and it's located in France and basically operated in the energy sector, oil and gas integrated, and basically this company operates worldwide. If you take a look at the graph, currently it's trading at $51 and is pretty much stable growing over this period of time, over this year. If you take a look at the graph on the long term, we can see a little drawdown in 2020 with Corona crisis, but almost every company had that. That's pretty okay. Then we see another try to rise up, and then another crisis here, dropped up to $32 and then steadily growing up. So market cap of this company is 135 billions, which is pretty large cap stock, and it is paying 6% dividends, 6%. And the payout ratio is a bit too high, 129%. Yes, you may say that it's a big payout ratio and basically it doesn't have that profit to pay that dividends, but if we take a look at here, the sales quarter to quarter, 80% increased, and EPS, earnings per share, quarter to quarter increased for 555%. It means that just recently at the last quarter, company received a big gain of revenue, and the price to earnings ratio is 8.6 and price to earnings to growth is 0.23. The company has a real big potential to even grow, and we can benefit basically not by just holding that share and receiving dividends, but also with the price growing up. And taking a look at the debts, the quick ratio for this company is 1, which is pretty okay for a company with dividends of 6%, and the debt to equity and long-term debt are a bit higher than they could be, but still okay for such a company. And the performance of this company for the past year is 9.5% growth. Let's take a look at the financials of this company. So the revenue has been steadily positive and basically not increasing, not decreasing. Yes, we have a drawdown in 2020 for Corona crisis, but then it's bounced back and basically keeping steady. And the net income for this company has been positive. Then we have drawdown in 2020 and then even risen more than previously, which is quite good. Taking a look at the balance sheet, we can see that total assets are quite big and keeping steady and slightly even increasing in 2021. Yes, we have debt here, but this is good for company paying 6% dividends. And let's take a look at the cash flows for this company. So operating cash flow is positive and it's basically keeping steady, drawdown in 2020 and then bouncing back and even increasing further than previously, which is pretty good. Investing cash flow is negative, which is good. Company is investing in itself and basically has a wide field to develop even more. And the financial cash flow, we can see that it's negative and even increasing, and this is basically, let's see where is it coming from. This is mainly coming from the cash dividends paid, means this is good. This is what we can see. This is company which is paying dividends quite stable and over a long period of time, especially in 2020 when we had that crisis, which is good for that company. Alright, the next company which is paying high dividends is Rio Tinto Group, ticker symbol RIO, and it's based in United Kingdom and located in the basic materials sector and dealing with mining worldwide. So now it's trading at $78 per share, pretty steady growth since the December of last year. So let's take a look at the statistics. This company is paying 8.8% dividends, and the payout ratio for that 8.8% is 60%. It means that a little bit more than the half of the profits the company is paying just for dividends, and 8.8% of dividends. So the cap for this company is 125 billions, which means it's a large cap company, and price to equity ratio is 6, which is much lower than the average in this sector. Means it's a good time to buy this company right now. Taking a look at the debts quick ratio is 1.5, which is good for such company. It means it can deal with current debts right now. And the long-term debt and debt overall is 0.26 and 0.24, which is pretty good and solid for such company paying 8.8% dividends. And taking a look at how company is growing, what are the sales, we can see that for the past 5 years it has been steadily increasing for every year for 13.5%, and EPS over the past 5 years every year has been 38.4%. That's quite good. And the performance for the last year, we can see that the price is increased for 7%. So taking a look at the financials for Rio Tinto, we can see that the revenue was positive and it was increasing year to year, and even in 2020 was not drawing down that much, and in 2021 it risen even more. So this is super cool result for such a company which is paying 8.8% cash dividends every year. The balance sheet for this company, total assets are pretty much steady and little bit slightly increasing, and the liabilities are not increasing that much together with total assets, and we can see that the equities are actually more than liabilities, which is super good for such solid company which is paying 8.8% cash dividends. And the number of shares has a slight increase in 2019 here, and it was keeping until 2020, and then it returned back to the original position. So the company made a buyback of that shares and reduced them to pretty much initial value. And the cash flows for Rio Tinto, we can see that it's positive. It has been increasing over years and not even coming to negative, which is pretty good. Investing cash flow is negative. Here in 2018 it was even positive. It means that the company was selling some assets, but generally it's negative and company is investing in itself, and the financial cash flow is negative, means the company is paying dividends for us, and free cash flow is positive and it has been increasing over years, which is pretty good and solid for such a good company. Alright, the stock number 3 for today is BHP Group Limited, ticker symbol BHP, traded on the New York Stock Exchange. The company is based in Australia. It's taking the basic materials sector and basically dealing with metals and mining. Taking a look at the graph now, it's trading at $73, and the company is paying 8.25% cash dividends each year. The market cap is 178 billions. This is pretty large cap company. And taking a look at the debts and equities, the quick ratio is 1.7, pretty good for such company paying high dividends. Long-term debt and current debt are all both in good condition, 0.37 and 0.31, pretty good and solid for such company. So sales quarter to quarter and EPS quarter to quarter has been increased 36% and 73% respectively, and EPS past 5 years has been grown for 92% on the average, and sales past 5 years has been growing for 14%. This is super good and tremendously good for such company paying such high dividends, 8.25% dividends, cash dividends each year. And performance for the last year, the company has even grown for 7%, which is pretty good and solid. So taking a look at the financials, we can see that the revenue has been positive and has been even increasing for the last 5 years. So the balance sheet, total assets are basically keeping on the same level, a little bit decreasing, but not that much. We can say that it's holding on the same level. The liabilities are also pretty on the same level, and the equities same as well. So we can see that this company operating for past 4 years is pretty much holding the same and paying its dividends with a high stability. Taking a look at the cash flows, we can see that operating cash flow has been pretty much stable in 2018 and 2019, drove down in 2020, but then risen even more in 2021. And traveling 12 months, it has been increased even more because we see that it has a large increase in quarter-to-quarter revenue. So the investing cash flow is negative. We can see that they're doing property, plant and equipment purchase with that investing cash flow in themselves, which is good. It means they're expanding their operations worldwide. And the financial cash flow is negative, and that is because most of that coming from the cash dividends paid. Yes, cash dividends paid, which is pretty high dividends as we saw before, 8.25%. Alright, the company number 4 for today is Eni S.p.A, ticker symbol E, and it's based in Italy and is taking the energy sector, oil and gas integrated, and basically is trading worldwide. We can see that it's paying 5.4% dividends, and the market cap is 53 billion for that company, pretty large cap stock. We can see that quick ratio is good for this company. It can pay out its current debts, but the long-term debts and debts overall are a bit high, yeah, but they're still paying good dividends, and for the dividends these debts are still within acceptable margin. And we can see that the sales for this company over last quarter increased by 84% and EPS increased tremendously high, 339%. Price to earnings to growth ratio is 0.39. Means that this is exactly a good moment to buy this company because it has a super big potential even to grow more, and our dividends will be paid off even in full even more. And the performance over last year, we can see that this company has been growing 20% for last year, which is super good. Taking a look at the financials, we can see that this company is pretty much stable. It has a little increase in 2020 but then increasing again, basically typical pattern what we see today with all companies, but pretty much the revenue is keeping steady. The EBIT for this company, we can see that it has been decreasing while approaching to the corona crisis, but then coming back to normal. The balance sheet, total assets pretty much increasing, the liabilities are increasing together with assets, and the equities, although pretty much keeping on the same level. The relationship is that we have liabilities more than equities, but still in a pretty much good extent for a company which is paying that high dividends. And the cash flow, we can see that the operational cash flow has been pretty much the same. It's positive and stable. Investing cash flow is negative and pretty much stable over all years except 2020. We can see that most of that is coming to the net purchase of property, plant and equipment and net business purchases. And the financial cash flow, we can see that sometimes it's even positive, means company was selling some assets, but the rest of the time it's negative. And we can see that it's constantly paying dividends each year, and especially important that it pays dividends during crisis times. Alright, and the last company for today that we're going to look at is POSCO Holdings Incorporated, ticker symbol PKX. It's based in South Korea and it's operating in basic materials sector and dealing with steel. We can see that currently it's trading at $62, and the graph is showing that it has a little drawdown in 2020 with that crisis, but then recovering pretty fast and having a strong rally until the May of 2021, but then going down and still keeping on pretty good level currently. We can see that this company is paying 5.76% dividends, which is super good in our case, and the market cap of this company is 21 billions. This is still large cap, but not that large as we've seen companies before. The quick ratio is 1.5 and all other debt ratios are super good, means this company with paying 5.7% dividends is still keeping pretty good debt to equity ratio, which is super good for us. We can own it and not being constantly in fear that this company will die because of inability of paying dividends. And we can see that earnings per share for past 5 years on average was increasing by 39% each year, and the sales for past 5 years has been increasing on average for 7%, and the last quarter we can see that the sales and EPS were increased super much, and this is exactly a good moment to buy this company to have a good dividends for the rest of our time. So taking a look at the financials, we can see that it's in Korean wons right now, but it will not prevent us to estimate the company. So total revenues were pretty much on the same level, then going down in 2020 and then increasing even more than previously in 2021, and trailing 12 months is still on the same level. And then EBIT for this company, it has been slightly decreasing until the corona crisis, and then in 2021 increased up to 9, I believe it's trillion Korean wons, that it covered all the losses it had during the crisis. So taking a look at the balance sheet for this company, the total assets were pretty much on the stable level and then even increased in 2021. The liabilities for this company was keeping on the same level. So with assets increasing and liabilities on the same level, we have that the equity of this company has been increasing, and that is still combining that it is paying pretty much high dividends for all of the shareholders. Super good. And let's take a look at the cash flows for this company. we can see operating cash flow basically positive and keeping steady and even increasing here, but then going back to the original, and I believe it has still a good potential. We can see it in 2020 when all the rest of the companies had big problems. This company had a rally up. Yeah, right here it had a really good time. Now it's coming back, corrected a little bit, but then still I believe this company has a pretty good future, and these numbers are showing that. So investing cash flow basically negative and increasing. It means that company is ready to invest in itself and to develop and expand its operations, and the financial cash flow is negative and even decreasing. So I believe it's cutting all the rest unnecessary debts except paying cash dividends, which is pretty much stable every year, and that is exactly what we want from the shares which we invest to get a stable dividends. Alright guys, that were 5 shares, and this company is having pretty good cash dividends yield. I hope you enjoyed it and it was clear. See you in this next video. Thanks.